you all once again for the world's largest fintech fest, the Global Fintech Fest, organized by Payments Council of India and Fintech Convergence Council of Internet and Mobile Association of India and National Payments Corporation of India. The fest is presented by the Ministry of Electronics and Information Technology, Government of India and Reserve Bank of India, and is supported by Niti Aayog, Startup India and Invest India. We would like to thank our powered by partner Razorpay, brought to you by partner Amazon Pay and WhatsApp, in association with partner Google Pay, Open Financial Technologies, and our digital payments partner Cash-Free Payments. The second edition of the summit, with the theme FinTech Empowering a Global Digital Economy, will provide an in-depth understanding of the latest businesses, policy, investment, and technology developments within the FinTech landscape globally. We would like to welcome you all for the Fireside Chat on building a digital transformation journey for financial businesses. Without further ado, let me introduce you to Mr. Sachin Seth, the partner, Financial Services Tech Transformation, today's discussion. And we would like to even welcome our esteemed set of speakers for this fireside chat, Mr. Arivuvel Ramu, the Chief Technology Officer, Tonik, Mr. Marc Entwistle, Principal Oliver Wyman Digital, and of course, the Founding Director of FinTech Association of Hong Kong. Dear delegates, you may please keep on posting your questions in the Q&A box or the chat box. The panel may pick up a few in the end and answer to your queries. Over to you, Mr. Seth.
Thank you, Swati. Thank you very much. And thank you, Internet and Mobile Association of India, Payment Council of India, and FinTech Convergence Council for organizing this wonderful event spread over almost 3 days. And really happy to have two of our eminent sort of panelists, industry leaders, thought leaders from Asia Pacific, and happy to get started with them in this early morning for India and little bit early noon for Hong Kong and Singapore, right? So good morning, Ramu. Good morning, Marc. And good to have you on the panel.
Thank you, Sachin. Great. Good
morning.
Great to be honored to be here.
Great. So first of all, I mean, on a lighter note, I would say this is a fireside chat, and I don't think we like to play with the fire in the morning, right? But I think that's the kind of format we are in, and really love this format. We have very, very focused discussion with industry thought leaders. While we do have bigger panels, etc., and I did yesterday one of them, but I think happy to have a very focused, concise panel with two of the thought leaders, right? So, Ramu, let me get started with you. You have been in the industry for a long time, and now you are part of one of the most happening bank in the Asia Pacific and also across the world. And as a CTO, which is mostly I would say the most critical role for any digital bank, right? So before I get into the specifics of Tonik Bank, just want to understand from you that, what do you think is happening in the digital setting of digital bank, neobank kind of models, and what's working, what's not working? And, is this digital transformation of financial services really overhyped, or has arrived and it is here to stay?
Sachin, fantastic question. In the right question on the perfect time, which is in a COVID, everybody couldn't move, where we all used to fly and the people used to move along. Now we are all stuck at home, starting from purchasing a small food packets to even groceries. Now people are stuck at home. The digital transformation, it's the last 10, 20 years, we have grown into a stage where we push the consumer to adapt the, accepting digital touch point. That's what earlier happened. With the pandemic, almost last 3 years, transformed the whole world, pushing the consumer to force to adapt the digital touch points, which is your mobile or internet, part, which help the financial institution adapt that customer needs and wants. For example, the existing banks. I'll talk about from the existing banks, because existing banks, they have opened up multiple branches and ATMs, kiosks in the malls. Now nobody is going. People are feared to go out. Then what is the model for them? How to serve the existing, millions of customers? The big challenge. You know, the banks have the processes and people and the technologies which is they bought over, they invested in time. So need to transform into the stage where how they can bring back those customers and serve them through digitally, through the mobile, through the phones, through the internet banking, instead of calling them into the branch and ATMs. This is one of the biggest challenge. That's where they need a digital transformation for the existing, all the institutionalized who's providing financial services over a decade. So this is opened up a huge opportunity for all the financial technology companies or the visionaries who want to, use this opportunity to get into the mode. So I strongly feel as the end of the day, it's a human and the process, right? To any transformation to be succeed, it's a change. Most of us knows changing the big elephant is very difficult. It eventually either die or very few elephants will become a big dolphin to how to swim in the big ocean when there is a big fatal comes in. So that's why this opportunity for most of us, who's there in the fintech, it's a big pie, and one is accelerating economy, not just in the existing market, the untouched market, which can be the opportunity to provide the service. That's where the whole of Asia now, the middle class income is going up. Second, the pandemic accelerated the transformation. So I strongly feel as a fintech person, this trend is going to be very upward, and it's going to open up a big economy, and for the people who's running the digital transformations in the financial sector as well as other sector, and it's a big money out there, big service out there, and big customer base out there to provide this better service because they deserved it.
Sure.
And yeah, over to you.
Great. No, thank you, Ramu. I think that was very good insights in terms of setting the context for our today's morning discussion. So, Marc, taking it forward and coming to you because you have been involved in Hong Kong, setting up Hong Kong FinTech sort of association as a founding director, and you have been working with key clients. You focus on FinTech strategy as your core area of competence. Just wanted to understand a little bit more that from your market perspective and otherwise based on your experience, that what are the key drivers of driving this digital transformation? I think Ramu did talk about pandemic, which obviously all of us have gone through in 1.5 years with different emotions, and it's no longer an area wherein people are now questioning that what's happening, why it is happening. It's basically everybody is accepted and moved on from there, right? So I wanted to ask you that what are the key drivers for the digital transformation? I mean, why would banks go and set up digital banks, neobanks, or transform the incumbents to become much more agile and digital savvy banks? Is it customer experience? Is it regulatory changes or regulatory pressures to improve the efficiencies, reduce the cost of operations, etc., etc., or it is industry convergence, right? I mean, there are many industries coming together, whether it's e-commerce, telecom, banking, edtech, food tech, agri-tech. So what are the key sort of drivers for digital transformation from your point of view?
Thank you. That's an excellent question. I think it's important to think about some of the different players in this space as well, because it's actually fairly varied. So when we're talking about the growth of the fintech space, kind of particularly in relation to banking, there's the incumbent banks themselves that Ramu touched on, and the position that they're in and whether they're choosing to kind of expand or protect. There's introduction of new players, which, as you pointed out, sometimes these are banks which are being set up as subsidiaries or majority owned by existing banks, or sometimes pure startups themselves and standalone fintechs. And the drivers for each of these can be quite different. I think we're in a super interesting time right now, not least because of the the pandemic, but just the huge amount of activity that's happening kind of regionally and globally. And there are a number of drivers behind that, of which one I feel is really the evolving role of regulators that have typically been often much more in the background with a primary mandate to be managing risk. But as we think long term and kind of evolving needs of customers, seeing the pace of change in other industries outside of financial services, actually you could take a view from a systemic risk perspective that long term, actually there's a requirement to almost be forcing incumbent banks to innovate at risk of some of these other players that have moved much faster in the digital space, whether it be e-commerce players or some of the big tech players, particularly out of kind of India and China and so on, that are now evolving and expanding internationally through kind of particular subsets of their offering, whether it be a payment service, establishing a footprint and then expanding out and acquiring smaller licenses, whether it be ultimately a full banking license or kind of starting in payments and expanding into loans and so on. But a lot of this, in my view, is really what I like to call regulatory-led innovation and that kind of pivot from the regulator. And we've seen that with the introduction of new digital banking licenses being provided, Hong Kong, Singapore, Malaysia, Philippines, and so on. Or broader initiatives which are very much global, such as open banking or open finance, which is just really creating opportunities on both sides for new players to enter the market, the creation of new industries, whilst also essentially requiring incumbent banks to make some transformation on their side. And then it's a decision for them as to whether they see that as a growth opportunity or just a regulatory requirement. And I think we've already seen examples of both, where that's been seen as a growth opportunity. But if I were to pick up on one of the perhaps factors introduced by the pandemic that we mentioned, in some ways that's been quite useful for some of the new players and some of the new digital banks, in that there's been a forced step change, particularly in economies where the level of digital usage from customers has been a bit lower. It's kind of almost forced that customer transition over into some of these new players. Whereas for a lot of the banks still operating in what is otherwise pretty low interest environment, pretty low return on equity, even kind of for the next several years on the horizon. Typically, the instinct, I think, seems to be on more of a protective view of digital transformation, investing in improved efficiency, cost cutting, and so on, which is maybe a good thing for some of these new players that can then force their kind of growth expansion and acquire some of these customers during that time.
Right. Fantastic, Marc. I think pretty good insights from you as well. So, Ramu, coming back to you, I'll just quote a sort of a statement which we normally use in digital transformations, that customers look for the any next experience as good as the last best experience, right? I mean, that's a typical say, right? And I wouldn't, without even saying that, we talk about big techs, we talk about Ubers, we talk about everybody of the world, right? We are so used to having a superior experience that we start expecting that from everyone around us, right? And banks are the ones which the people use almost every day. So the banks actually are under tremendous pressure to become as good as other digital companies in the experience, right? So on a lighter note, just wanted to ask you that did the founders or the founding team think that having a Tonik was the best experience, that's why we created Tonik Bank? Or was it that just it was like, it was a word which catches everybody's attention and it's also has its own meanings? So maybe I'd like to understand a little bit about it, right? And obviously follow-on question would be that, how the new, the new digital banks geared up to compete with the incumbents, because see, new banks are typically firepowered by the equity which is coming from private equity players, from VCs, from various other funds, etc. Because the future looks bright, right? Whereas most of the digital transformation programs done in incumbent banks are directly driven on a P&L basis, right? Everybody wants to look at cost to income ratio reduction, cross sale, upsale, 360-degree view of the customer, better NPS score, and things like that, right? So I know I have given you two loaded questions. Obviously, the first one is a lighter one, that why Tonik? Everybody loves to have Tonik, and it's good for health, but that's one. And second is that how do you differentiate, right? I mean, what's the storyline, and how is going to be sustainable? Yeah.
Fantastic. Thank you. Sachin, I'll pick it up. First question, why Tonik? So we had a dream in 2018. We want to launch a new bank across Southeast Asia, not just making money. We want to change people's life. We want to get into financial inclusion segment to help. We started as a technology company in Singapore. I'm one of the founding members, along with the like-minded people. December 2019, we got our in-principle license when we pushed our idea as a pilot market in the Philippines. Of course, we knocked the door of almost all the regulator here. Of course, it's all driven through regulator. Any innovations, if you get a regulator alignment and blessing, it can go fast. And now for 2020, I launched the bank with the MVP approach, minimum viable product approach, with automating onboarding and the saving products. That's how we quickly launched the bank. And we are in September 2021. The success today for Tonik is almost 80 million plus US dollar, 80 million US dollar plus customer deposits, and the valuation of the bank today close to $500 million. That's the growth fintech. If someone want to why fintech, that's the answer short. So, but the thing, if I step back, the pain area, when I look at as a fintech, how we can be as a technology company having a banking license, how they operate in the market. That's the slogan. With that, the three key pillars when we looked at it. Number one is, if I want to have a bank financial service, I need to go out, find a bank branch, open a bank account. For that, I need to wear a good dress. Of course, we know most of the Southeast Asian market. If the people need to open a bank account, they have to travel 10 to 15 kilometers, where more rural places. I'm not talking about the people who's living in cities and towns, but people living in, most of the rural places. It's very difficult for them to. It's like a festival. They need to prepare, get ready, and we need to go to the bank branch and open the bank account, producing a lot of documents. How to avoid that? How someone can open a bank account in a less than 2 minutes, less than 5 minutes, where they are sitting. Second problem, I need a quick money because I need of money. I cannot wait for 8 into 15 days waiting for a money if I need a quick money. So looking at the transforming the lending need for mass affluent, emerging affluent. Then I want to move money faster. My son need to pay something. My dad want to, his livelihood expenses, want to send money. Cannot wait for 3 days or 1 week's moving the money. Can we do it in a real time? Can we be able to access the money in a quick, faster manner? So these are all the pain point today in Southeast Asia, how to access the bank without going to branch, financial services, how to access quick money, how to save money and earn money. This is what the key problem, saving the money, earning the money, need money, and move the money. This is where the key, our journey has been built with three focus. How my financial inclusion segment, which means either can be unsatisfied or underserved or untouched market, can access this capability. We looked at a customer-centric design. You asked for what is the secret sauce. A Tonik focused on simple design, which is segment-based. If you look at our app, if you can download it, you can see the app is very light and more talking to the customers. The bold fonts and the language lingo is more specific to local. and which is talking to people. The app can talk to people. Second, the product innovation, because most of the people trying to bring it to digital without transforming the product. We want to really touch the product and journey. One is the eKYC, 2 minutes, no ID required. You can open the bank account, $1,000 you can play. You can get your bank account immediately with a virtual card. You can fund it, pay all the e-commerce transformation. This is exactly needed for pandemic. Second, if you have another 3 more minutes, one ID proof enough for you to play with $1 million money. And I can give you within 5 minutes, give you the standard KYC user. If you have another 5 more minutes, talk to me over video calling. I will do the enhanced KYC. In 10 minutes, you are ready to play with the multi-million-dollar account. This is one kind of. Second, personal saving. We create kid saving product. We create, home renovation product. Rather than empower the customer, he create what he wants. The dynamic pre-order creation. We call it as personal saving. Then most of the Southeast Asia, it's a people want to on a communal basis. People, mom, dad, sisters want to save together. Bring this concept into the product, and especially fast customer servicing, quick lend. First than less than 5 minutes, I can able to give you a loan. How the technology will help me to automate things, alternate credit scoring, AML, data lakes. This helped me to take a faster decisions. The finally, which Marc said, open banking is a key. We thought about 3 years back how to bring open banking, open finance to bring the ecosystem partnership. We strongly believe one guy cannot provide all the need. How you work with the digital lenders, payroll companies, wallet providers, payroll providers, and wealth providers, connecting them and work together and provide the better and faster service. And this is where Tonik is today focusing with the elegant features, simple, intuitive, and customer centric. Anything starts and ends with the customer. That's where the suite of Tonik today.
Perfect. No, I think there's a lot of insights. I think one can't get sitting in India and just going through Tonik app or Tonik website, but quite a bit of insights for I think everybody in the global fintech fest to know about, right? So as we have only a few minutes left, I think I'll probably switch to the rapid fire round and try to get both of you to have the same questions answered, but with your sort of thought process insights. So there are two questions I would like to pose to both of you. First and foremost is that you have looked at the whole Asia Pacific and other parts of the world, and obviously India also in some ways or the other when things are happening in India. What do you think India as a fintech hub can share or one or two best practices you think in India has adopted and which could be relevant to the Asia Pacific market which you are working on, right? And there are one or two things which in Asia Pacific market happening which are cutting edge, very differentiated, might require some tweaking of regulatory aspects in India to improve it for the better customer experience, etc. So what could India adopt from the other countries, especially in Asia Pacific, with so much of innovation happening, right? So that's the first question. And the second quick question would be that within the Asia Pacific, how do you manage this complexity of Thailand versus Indonesia versus Philippines versus Vietnam versus Singapore and Hong Kong, which are very different markets, and how does it get adopted? We do talk about Southeast Asia or Asia Pacific in a sort of basket of countries together, but are they really a basket of countries, or are every country is unique in its sense in terms of regulations, etc.? So I know these are two bit loaded questions and probably limited time, but getting started with Marc and then coming to you, Ramu.
Sorry, do you mind repeating the first question? Maybe we'll take each one.
Yeah. Well, the first one is that what could be for digital transformation for the financial services? What could be one or two things you think India has done well, which can be used by the banks in Asia Pacific? And what could be one or two things what Asia Pacific banks are doing, which India could adopt to become much more efficient? And second is the impact. Or I think let's go with this first one itself, because I think we can get a more deeper answer on this. Yeah. Second one is not that much relevant. So only on that. Yeah. Let's go ahead.
Thank you. Yeah. So I think one area that's super interesting whenever I think from an India perspective is just the sheer amount of infrastructure that's being put in place. So thinking kind of the evolution of India Stack, whether it be kind of UPI, Aadhaar, and so on. Like these are, if we're thinking from a digital transformation perspective, although these are very much long-term investments, we touched on open banking a little bit. That's shown its face in many different forms across Asia, and definitely the speed of adoption has been fairly inconsistent. But I think if we're thinking from a long-term perspective, we've already seen with some of the new neobanks or kind of greenfield banks across Asia, what they're building is typically quite different. And if they want to be able to attack the market, then there's a real need to think through how to be able to do things differently. So as Ramu was explaining with Tonik, it's really building everything around customer needs. And once you've got a new kind of technology stack, you've got new people, new processes, and so on, there's the ability to create a very different style of bank, right? So rather than just a more efficient version of a digital bank, there's the opportunity to be able to create much more of a lifestyle based offering that's really building against customer needs and being able to service customers in every aspect of their lives, rather than someone thinking, I need a mortgage, I need a loan, I'll go and get my bank to do that. And to be able to inject yourself as a service really into people's lives, you need to have this underlying infrastructure to be able to share data with much more strategic types of lifestyle partners, have a much more holistic view of how people are living their lives, where they're spending their time, and so on. So I think we're in an interesting space right now where we're seeing various economies putting some of those building blocks in place to be able to enable from an infrastructural level, whilst at the same time seeing certain economies start to build some of these banks. And it will be interesting, I think, to see who gets there first. We're kind of at the exciting early stages now, but I think we're still a few years away from seeing the fruits of all of this come together.
Great. Thank you, Marc. Ramu, coming to you on the same question.
So for me, India is very, very, attractive fintech. Myself, I worked with Citibank and Axis Bank during the transformation, especially the modernization stage. Number one, everybody need to learn from India is the single ID concept, which is Aadhaar. Think about the biggest problem today. More than 60% of world population not included in the bank because you don't have a unique ID to convert them, linking them the whole financial transaction. This is amazing move by the Indian government to bring everybody under the umbrella of single ID, which all other part of the world can adopt. For example, Singapore has their own ID, now Hong Kong has their own ID, Philippines was following that. So it's like, so one of the best thing, if you can take that adaptation of single ID, then eKYC is something smooth. You can convert the mass population into banking. Second, today, last 3 years, we're talking about a lot of digital banking, digital transformation. India does. This is like even 5-10 years back. I strongly, a lot of use cases I used to implement in India before even bringing into this part of the world. But it's a less marketing in India perspective. For example, the 8 licenses issued in the financial service in India, mainly not to the banks. It's all telcos and non-bankings came into the financial services in the 2013. Now we are bringing that, duplicating and putting some more lipstick in this part of the world. And the next big thing is your UPI. Still, a lot of Southeast Asian country need to learn from that concept of how we can move the money easily through mobile numbers to other ID. How we can do easy movement. This is still very difficult. Even the QR payment, it took 4 or 5 years to implement in this part of the world. And a lot to learn from India. And the big thing is the scalability. The monetization gave the time to really test most of the technology provider to test how the financial systems can be scalable. Most of the bank, I believe, in India, 3x to 10x growth during the monetization stage, how to onboard people. This is a huge learning. how to adapt retail mass market. That's use case we can learn from India a lot. Can be duplicatable in Myanmar, Indonesia, Vietnam.
Right.
That's one of the things.
Excellent. Excellent. Thank you. So I think a wonderful discussion in the early morning, and getting back to Swati, our host. I know she's keeping a time check. I mean, this discussion could have gone for another couple of hours. Very interesting topic, and great to have both of you for this session. So Swati, handing over back to you, and thank you for giving us this opportunity to be together and have this conversation.
Thank you, Mr. Seth, for joining in, and thank you, Mr. Ramu and Entwistle, for giving such an amazing insights for on this particular topic. And I would like to thank all the delegates who have joined in this morning for this particular session, and would request you to stay back and stay tuned for the rest of the sessions which are organized for this day. So thank you so much for joining in, and thank you so much for joining in for the Global FinTech Fest. Have a great day. Take care. Bye-bye.
Thank you.
Have a good day. Thank you, Sachin.
Bye.